All right, so welcome to another video. Today, what we want to do is take a look at Tesla. It's after earnings, so I'm going to share with you a double calendar strategy and setup. Markets kind of acting a little choppy. With choppier markets, I like to be a little more defensive. With that defensive concept, I'm thinking a little more positive vega. Positive vega helps you out when the markets sell off, because now you've got a little bit more of that volatility baked in. So if the market sells off and you have positive or long options, then in general, it can kind of cushion you on the downside. So that's where that double calendar or diagonals can be a little bit beneficial from a caution standpoint. And especially if you're selling a lot of options, let's say verticals, iron condors, or just you're trying to sell premium, having some positive vega for a choppy market can be helpful internally, mentally, psychologically, that kind of stuff. So let's get started. We're going to go ahead and check some of these things out. I definitely want to let you know that you can take a look at our website at tradersfly.com. We've got a new live class coming up here next week, so definitely check that out if you're kind of brand new to our channel website. And you can also sign up to some of the other old classes. Some of these are like 10 hours long in detail, like adjustments, portfolio construction, single options. So there's a lot of stuff there going on. And you can also check out the Discord channel. That is kind of where I post some charts and that kind of stuff, and that's link's going to be in the description. So if you're not part of Discord, it's just a way to communicate. You can also ask me questions in there as well. Okay, let's kick things off. I'm going to show you some stuff on the trading platform here. And we're going to go in and do something on Tesla. The market is kind of weak. I mean, you can see like stuff like Facebook is selling off in a big way. Even Tesla pops and then selling off, gravitating in. But, Netflix kind of started the bad boat trend here. And then, with our earnings, massive sell-off. So we've got a little bit of a problem here on some of these stocks. So you can see they're just, been tanking and just boom, ouch, right? Tesla is the one that pops, but it's kind of coming back. So again, I would say, from a feeling standpoint, not that my feelings matter, but from a feeling standpoint, it seems a little toppy and it's kind of pulling back. But of course, we could go A to B, B to C, C to D, and that could be amazing. So if you're kind of bullish on Tesla and things look good, some people say it's going to explode. Some people say, hey, it should be where it is. So, it could just be there. And that's where that double calendar could be nice. But if you notice what's been happening recently, it's just been selling off. Like, it pops, sells off, pops, kind of sells off. Like towards the end of the day, it pulls back. And it's just a market weakness as well. That's part of that nature. So I want to be a little more cautious. And if you want to be a little more careful, with a weak market, that's where kind of a double calendar comes into play. Normally, these are really nice to do right, a little before earnings and get out before the earnings come out. But now all the volatility is kind of deflated. So how can you do these? Well, make sure you don't go too far in duration if the stock does run up. So I do want to do them a little bit shorter dated. I'm probably going to stick somewhere around the 22.29 or 29.36 or even the 15.22 area. So let's kind of start out with a 15 zone here, and I'm going to just put a calendar right at the money. So to do that, I will just go ahead, and the way that these are constructed is I go ahead and sell the 15-day but buy the 22-day. So the 15-day expires or decays a lot faster, and that's where you make your money. Is the 15-day decays, from time premium on options, decays faster than the 22-day, and then you buy the 22-day. So that's the way we're going to do it. So let's start out with a 1040. That's the exact at the money. And you can right click and go to buy a calendar, because you're buying a calendar, because you're buying the longer dated one. And I just want to take a look at this construction of this calendar. And what I'm looking for is I'm actually looking to see the risk to kind of reward here a bit, the range. And sometimes I'll play with a little bit of these strikes. So I might go May 20 here and go to, let's say, May 13th and see how that looks. The longer dated you go, the more vega you'll stack. Okay, and I want to compare it to my theta. So my theta and vega is kind of close, so the vega won't be as big of an issue. But I'm also looking at the slope of my line. It's kind of, how shall we say it? It's kind of flatter, rather than if I go shorter duration, you'll get much more curvature like that. And that can become a little bit of an issue. So now if this pulls back, you know, I'll still get into some trouble, but it's not that bad. So look, the trade is like $1,000, it's $782. And if it pulls back to 980, which this stock can do fairly quickly, so it's 10, 20, 30, 40, about 50 points, you know, I'll be down $100. So it's not too bad. But if it kind of starts heading higher, I will have a bit of the vega being a little bit of a concern there. So, you know, if I'm a long investor in the stock, but I'm concerned about the pullback, this is where this positive vega can help me a bit. I've got theta working for me, but what if this continues to go? The earnings were good, right? So if this continues to kind of grind up, you know, it might even pop to, let's say, this area and pull back. This is where I start adding in maybe another calendar, but I'll put that calendar maybe a little bit further out. So let's go to 1100 right here. So this is kind of like a bullish double calendar right here set up. And that means I've got a little more delta here baked in, but I've got a little bit positive vega. So that positive vega will help me on this downside. And the delta will help me a little bit right there on the upside. So depending on your capital and how you want to structure it, I could even do 2-to-1 kind of contracts like this where I'm a little bullish on it. And then you could say, hey, well, I'm a little bullish, but I've got extra Vegas for the downside. But remember, now you're stacking a little too much capital maybe to the upside. You could always just wait a little bit and see how things play out. And depending on how aggressive you want to be on the bullish side, you might just say, hey, I'll go ahead and do a 1040 and a 1075 where you're not too aggressive. You're kind of one's a little more bullish than the other. Just that way you can offset some of that vega risk on the upside. And it gives you a good range to about 1130 on that stock. So 1130 is kind of the top end right here. So if the stock does pull back, you've got some room and you got positive vega. But if the stock starts popping, you have that one calendar up here that'll help you out. And if it just chops around, this will actually be great. So depending on what you're trying to do, you could always stack two calendars at a certain price point, or even another one at like 1100 right here. So you got kind of a 1, 2, 3 right here where you're kind of bullish on it. And, you know, you could even play with, you know, your ranges here if you like. So you've got kind of this upward range and cushion. So as it keeps going up, you've got some good theta there, a little bit of positive vega. So as the pullback happens, you're somewhat protected, but now you're adding many more calendars and you're less protected. So now you're up to $5,000, like, you know, 4.5, 4.7 grand in there. So starting out with one is kind of a nice way to go with it. And then you can add a second one right here, calendar, to be a little more bullish if you like. If you want to be bearish, that's totally okay. You could also do that. And I could bring this down into, let's say, the 990. And I could do the put side here. And I could do the same concept here where I'm actually a little more bearish, where I've got some negative delta, positive vega. And now if this pulls back, I've got more range and I could do 2 contracts there. So now I've got this kind of bearish double calendar view there. So depending on how you want to structure the trade, I'm going to go ahead and do bullish because the earnings were good. And not to mention, you know, this stock is fairly loved. So I will go ahead and just do bullish. And also many people just are long investors. With being a long investor, you're typically looking for things to go to the upside. So we'll do something like this. And we'll do, let's see, one right here. That's maybe 2 bullish right now for these kinds of conditions. The market conditions are weak, so I want to bring it in a little tighter. I don't want to go too wide and be too bullish. So I'll do something like this, like a 1-2 spread. And that way I've got a little bit more room. You could even tweak this to a diagonal if you like, by just doing custom and start rotating this a little bit. And that might make things a little easier. And you could do it like that if you want. But I want to show you like a double calendar setup and structure. So you could just do a diagonal and just do a slight rotation. But for this trade example, we're just going to stick to calendars. It's a little bit easier for some people to understand. And we've got a 1, 2, and one at 1040 and one at 1075, both call spreads. Could you do one on the put side? Sure. It's not going to matter that much. One on the put side, the one that's kind of right at the money, and one on the call side. And that way, you know, you could say, hey, the puts are my one spread, or here in this case also the contracts. One will be the 1040s, and the two twos will be the 1075s, and it'll be the call side. And now you've got kind of a trade setup. Now I could put these in all individually, or I could actually construct a double calendar. It's up to you. I'm just going to go ahead and just send these in. Again, paper account, just to show you kind of the trade example here. And then you'll see that Tesla trade there kind of playing around. So anyway, that's kind of a nice setup. And the way that you might manage this trade, or the way you might look at it, is that, hey, if it goes down to, let's say, your break evens, you could get out. You could also look at, hey, what's your potential to make on this strategy. So let's say right here, okay, so you're using 2,300, 2,400, and let's say it expires or decays about $400, maybe $600. So if you're trying to make about $600, I probably don't want to lose more, about $700, $800. So if this gets down to about that $600 mark, I probably want to get out. So that would probably be your exit point. So you kind of can do a basic calculation like that. Look, if you're making about 600, don't lose more than $700, $800, maybe $900, somewhere in that range. So, and now you've got some room for this on the upside, and you got a little bit of cushion here on the downside for it to go. And you won't lose theta all the way till even right here. You know, you actually up to this point, you're pretty much still making some theta, because watch what happens with this spread, is that, you know, right here, even a week later, you'll only be at a -1 theta. So in here, you're still kind of holding some theta for a while, because it's trying to go wider. So if you look at that range right here, that theta stays kind of stable, even way out there. And even right here, your theta is kind of staying a little bit stable. And that's what's nice about these calendars. And they even go a little bit outside of the range. You can see right here, outside of the range of the expiration. So look at that. So you got a bleed effect there going. So anyways, that's what I want to show you today. Hope you enjoyed the video. Truly appreciate it. You know, if you want to check out some of the freebies we have on our website, just click the link right over here, and you can get started. All right, thanks again, and I will see you next time.